Oh shit. What's poppin'? Alright, look. Check it. Gold just smashed another record below and past 4 stacks, baby. An ounce. Do you get what that means? $4,000 an ounce. Come on, shit. The price surge passed the $4,000 mark for the first time in history right around October 8th. This year, that was like a week and a half ago. And it hasn't looked back since. And nah, this ain't because your cousin or your uncle is stacking coins in a shoebox or because some influencer dropped a hot stock take. Let me tell you, this is because the whole global financial system is straight up bleeding out. This isn't some short term rally or a temperature hype train, I guess. This isn't a story about a shiny metal getting more expensive. This is basically a quiet panic. Why would I say that? Well, a silent, coordinated move by people who know how the game is really played. The price of gold has gone up more than 50% this year alone. A rally that's even faster and more aggressive than the one we saw after the 2008 financial crisis. So, what does all that mean? Well, and when the suits and the shot callers, the central banks and the billion-dollar fund managers start buying gold by the truckload, it ain't for a new chain, fam. I promise you that. Can you just picture Jerome Powell with a chain on? It's because they can feel the floorboards shaking. Shaking and baking. It's because gold is their insurance policy against a system they know is cracking at the seams. It's the ultimate safe haven asset. When geopolitical stress is high and all that paper money feels a little too risky, this is what some people are calling, a debasement trade. I'm sure you heard that one around a little bit, but maybe you haven't. But basically, it's a massive bet against the fading trust in the United States dollar and the government's ability to pay its fucking debts. That's where we are right now. That's what's happening. We 35, $36 trillion in debt, and basically we pay $1 billion with a B dollars every single day that goes by just on the interest payments alone. That, my friends, is called unfucking sustainable. Stick with me for a second because I got a lot more that goes into this. All right?
BoomBerg on the track.
Okay, so inflation, interest rates, and why the Federal Reserve may feel boxed in. Fed is out here playing Jenga with some wet noodles. You dig? Literally. Can you imagine that? They are caught between a rock and a hard place. Ooh, that's a cliche one, right? The official story is they started chopping interest rates back in September because of the job market was looking weak and they wanted to get ahead of a slowdown. The Federal Open Market Committee cut its benchmark rate by 1/4 percentage point in September 2025, like a month or so ago, bringing it down to a range of 4.0 to 4.25%. That was the first cut of the year, and they've signaled more are coming. But that's just the story you're going to get on TV because I don't think we're going to get any more cuts. I mean, unless literally something breaks within our economy, and we're going to talk about that. The real problem is they're fucking trapped. If they raise rates to kill the inflation that is still burning a hole in your pocket, which stood at 4.2% September, by the way, more than double the Fed's target, they risk crashing the whole economy. We're talking stock market pain, a deep recession, the works. Think about the US national debt. It's so massive that every time they raise rates, the interest payments on the debt balloon choking the government's budget. They can't afford higher rates, but if they cut rates, which they've already started to, inflation comes roaring back like a bad habit and smacks you in the face. It's fucking crazy. The situation has a name, by the way. It's called stagflation, people. It's a toxic cocktail where you get a stagnant, shrieking economy and high inflation at the same time. The worst of both worlds. Major institutions from the OECD to JP Morgan have been warning about stagflation risks all year. But that doesn't fucking matter because they're always going to say stupid shit like that or whatever. Jamie Dimon's for the past 3 or 4 years has said recession incoming, and technically we haven't seen one. I don't know about that, but I think we're definitely in one or just in the tail, just like in the very first part of it. But either way, um, they've been okay, JP Morgan, Jamie Dimon, whatever. They've been warning about stagflation risks all year. Please, we've been talking about this since 2022. But pointing to slow GDP growth and stubborn inflation, I'm talking about the JP Morgan there. When you're in that environment, what looks good? Not stocks, because companies are making less money. Not bonds, because inflation is eating away your returns. Gold, something that doesn't pay you nothing, what they call a non yielding asset, suddenly looks like the prettiest thing at the party because it holds its value. Not like fucking Bitcoin and not like fucking all these other cryptocurrencies they call safe havens and all that shit. And I don't give a fuck what anybody says. I do not fucking don't care for crypto. Okay? In my opinion, I think a crypto liquidation that we're starting to see is going to be like the fucking pull down of the rug. Okay? The liquidity will suck money out of the market. That is something we've never dealt with before during a big correction in the market. We didn't have Bitcoin so tied in to ETFs and all that shit. So when you get a liquidity drain from these leveraged, I mean, I'm telling you, don't get me started on crypto because it's a joke. Okay, I mean that's like if all of if my money in my wallet or my bank account was Bitcoin, right? Let's just say, I mean, you could literally go to bed a billionaire and wake up a millionaire. That's how volatile this shit is. How could it ever be a stable coin? Something stable. You can't do it. It's speculative. I mean, if anything, the only good thing to come out of crypto, I guess, is the goddamn blockchain. And but other than that, just been a bunch of scams. It's like forex. I mean, it is forex. It's a fucking fake currency. Anyways, sorry. It's not a safe haven. Okay, that's all I'm trying to say. Oh my god, a lot of people are gonna get mad at me for that one. Think of it like this though: them dollars in your pocket, they're melting like ice cubes on the sidewalk in July. The Fed is printing more and more of them to keep the system afloat, and each one is worth less and less. Gold don't melt. Gold is an ancient store of value that can't be printed out of fucking thin air. It's the final backstop, not in the ways that count anyway. So, understand what I'm getting at here? If you don't, I can make it very clear for you. But just hold on, because this is all tied together to different things. I want to talk to you about the CNBS office market collapse. The sickness is spreading. God, I've been talking about this for fucking years, and I hate to say it when I'm right, But man, I was right about this one, and I was basically laughed at. Oh, they called me Chicken Little. Who's laughing now? So you want the real drama? The story, the mainstream news is terrified to touch, but I'm out there on Twitter or LinkedIn and all this shit because I'm in the commercial real estate world, occupier services for big office tenants and stuff like that. So I witnessed all of this go down. But either way, you're scaring people, Chuck. Or fuck, no, I'm not. I'm trying to tell them what the deal is, right? They're our clients. They should know. Anyways, but yeah, so like I said, it's the story the mainstream's not going to tell you. They're terrified to touch it. So let's talk about CNBS. Does MBS ring a bell to anybody? MBS, MBS, MBS. Oh, yo, shit, yeah. 2007, 2008, mortgage-backed securities. Well, I'm sure if you've seen The Big Short, yeah, that term is now probably coming back to you. CDOs, collateralized debt obligations, yada yada yada. But put a C in front of MBS, you get CNBS. And what does that stand for? Commercial mortgage-backed securities. It's the same kind of toxic waste they cooked up back in '08 with houses, right? But this time, the poison's in the office buildings. You know, and office buildings can range anywhere from few $100 million, or I mean, if you want to get like a really tiny shitty one, I mean, whatever. But I'm talking about like the real deal Holyfields, up to over $1 billion, depending on what market you're in. And ain't nobody buying that shit in cash, okay? They're taking a loan on it. That's where these CNBS shit comes from. So all across the country, office buildings are ghost towns for the most part. They really are. Maybe some of your class A's are doing all right, but like your class B's, your class A minuses, whatever, and below are getting smoked. Okay? Smoked. The work from home revolution from COVID, it's permanent, people. It's not, we're not going back to the full everybody in the office thing. It's just not going to happen. Why? It's too expensive. Okay? Like, I'll get into that. But like, the loans on these buildings, that's what's permanent. See, they're still on the books of the banks, packaged up into bundles of debt and sold to investors as these safe CMBS investments. It's the same shit that happened in '08. It's just with the commercial market now. Now, it's not like they were trying to be tricky and it was this new product. I mean, it actually is a very smart thing to do. I know this. I used to use CMBS. I'd have the information from the TREP CMBS, like delinquent, when buildings maturities were due, and I could use that as leverage to get hired by if the tenant had, they were one of the bigger tenants in the building. Their lease was going to come up in the next 4 or 5 years, So let's use this leverage right now because they have a CMBS maturity date coming up, and if you leave, you are the main source of cash flow. You have the leverage. Let's do this today. And we get hired. But that was before COVID, right? So, so I kind of gave you a little bit right there, right? COVID, well, everybody knows this, right? Change everything, right? People figured out, I mean, get to work from home. They were able to be, successfully do it, productive for the most part. Um, now, I'll finish this and then I will go into more depth. But anyways, like I was saying, yes, they package them into CMBS debts, and it's not exactly the same as '08, like as criminal was, because this, like I was saying, it really does work. But when you have an instance like COVID, I mean, it's like almost like it's like a god, an act of God, force majeure. We use that to get some clients out of their leases, it's an act of God, force majeure. Um, but look, they say it's safe and all this. They package these things up. But they ain't safe. The rate of people not paying on office loans bundled up in this stuff has shot to a new all-time high. It's even worse than the '08 mess. According to the latest data from August 2025 from like the TREP report, TREPP, look them up, the delinquency rate for the office CNBS market hit a staggering 11.66%. That's not just a number, it's a symptom of sickness that's spreading through the banking system. Wait a minute, Chuck, the banking system? I thought we were talking about office buildings. And especially the regional banking systems, and I'll get into that, that hold so much of this commercial debt. It's absolutely absurd. I'm sure some of you have actually heard me talk about this before. I know people in the Bag Brigade know all about this. And here's the ticking time bomb now. There's a maturity wall. These CNBS debts typically have a 10-year maturity with a balloon payment at the end. So nearly $1 trillion worth of these commercial mortgage-backed security loans need to be refinanced this year alone, okay? That's 2025. We literally, legitimately have 2.5 months left. But who's gonna give new money to an empty building, right? Well, it's not even about giving money to an empty building. Here's what happens, right? You get COVID and all that shit, and then landlords are doing okay at first, right? Because if you look at a chart, and I'll have to show you, you really didn't see a pickup in the delinquency rates or in defaults or whatever in the office market in the United States until about the beginning of 2023. It's about 3 years after COVID hit originally. Well, why? Why did they start to ramp up then? Because the leases started running out. The leases started running out. Or if running out and they weren't getting nobody was renewing their leases, or if the tenants were actually renewing, they were most likely downsizing significantly. I'm talking if they took 5, 6, 7, 8 floors in an office building downtown, well, they'll probably stick around, but they're probably only going to take half of that space. It really depends on the type of company it is and all this, but regardless, the landlords depend on the tenant rent. It's their cash flow to pay off these CMBS debts. So when this started to take place, and I was talking about this problem starting to happen in 2022, 2021, I was a little early to the party, and like I said, people called me chicken noodle, whatever. Because now, since 2023, it's basically almost been almost 3 years of just straight up. Like straight up. And I will show you a chart. But I just want you to understand that. So what happens when they default? The landlords on these CMBS loans. Well, the regional banks, they got to take them back on their books, I guess, right? That's what you're supposed to do. I mean, they have these special services things, but all that. But regardless, look, you can't refinance a fucking office building at interest rates at this level because their fucking dumbasses decided to buy these these things. I mean, I say dumbasses. I mean, why wouldn't you? If you're going to take out a CMBS loan, you might as well get it at a very low interest rate. What I'm getting at though is you can't if you got the fucking interest rate at 1%. Refinancing at 4.5 or 5 just doesn't seem like it's gonna work out that way for you. It just doesn't add up. So you've probably seen at least me post in the Bag Brigade Discord community, or some people are talking about this on the news and stuff. But like you are seeing institutional investors who basically bought buildings, office buildings, for with a great CMBS original rate back in 2017, 2018, 2016, and then now they're offloading them because they can't refinance them. They don't have any more cash flow, and they're selling them for pennies on the dollar. I've seen stories of buildings from Denver to San Francisco to Los Angeles to Houston to all over the goddamn country, and literally like a building that they had purchased for like $800 million in 2017 are getting sold for like $100 million or less. And it's happening on the regular. I mean, shit, there's people who can actually have enough money to buy that without a loan. So I see why. I mean, if I had that much, I'd consider it. But another problem is, let's say they don't sell it or whatever, the bank's got to take it back. Now, what's a bank going to do with a zombie building on their books? Nothing. They're not going to do anything. They can't. And basically it's going to cause a domino effect of bank failures, bad loans. Okay, that's what you're starting to see right now in the banking sector. Okay, KRE, the regional bank ETF, getting absolutely mollywopped. XLF, the SP financial sector, getting mollywopped. Why? That's exactly why. It's starting to all come to fruition, I guess. I mean, you can try to furbish a building to an office building to be for residential purposes, sort of, kinda. But think about this. You got to think about all the big pieces here. We still technically are at high interest rate environment, which I personally don't think these are high interest rates. These are normal interest rates. You can't go back to zero. That is unsustainable. The age of easy money here, that shit is over with, okay? Anyways, what I'm getting at is, so first of all, if you try to convert an office building into a residential building, you got to think about this. First of all, office buildings typically do not have openable windows. Okay, their plumbing systems, like it's not built like that, where each unit has its own shower, bathroom, whatever, and you gotta have openable windows. So that is not going to be cheap. Period. So you're going to have to get a construction company to come in, and they're not going to do it on for cash. They're going to have to take out a construction loan. Well, with interest rates still high, I don't know. See, that's another problem that they're going to run into. And if they even actually did do the fucking houses or like make those into residential places, I don't know, man. I still think they'd be extremely fucking expensive to where people still can't afford them. It's fucking absurd. Yeah, and let's just throw the whole housing market situation on top of that too, by the way. That's another fucking ticking time bomb. So, this is a slow motion bank crash held together with nothing but duct tape and a prayer. The banks are smiling for the cameras, but in the back rooms, they're staring at a black hole of losses. Straight up. This is the rot under the floorboards that guys buying gold can smell from a mile of fucking way. I can go into more depth about that if you like me to make a full episode about that. The global big dogs are hoarding gold like the world's about to end. Who am I talking about? Huh? Who am I talking about? So wait, well then, hold on. Where's all the fear going? Just watch the heavy hitters. Just watch what they're doing. Don't listen to what they say. Watch their hands. Watch their hands. China copping gold like it's the last batch of Earth. Russia on the same hustle. For the third year in a row, central banks around the world have been buying over 1,000 metric tons of gold. It's a historic, unprecedented shopping spree. My, my friends, you dig? The World Gold Council survey show that central banks are more committed than ever to increasing their gold reserves. Remember, this isn't just the central bank of the United States, like the Federal Reserve. This is all of them across the globe. And then you got the whole BRICS crew, right? Brazil, Russia, India, China, South Africa. Plus their new members like Iran and the UAE. They're building their own VIP room. And the dollar can't get past the velvet rope. It's true. These countries have been buying up the most gold, making their reserves look like real heavy and diversifying away from the United States dollar. They're creating their own payment system like BRICS Pay, to bypass, to bypass the U.S. controlled SWIFT system or whatever. It's true though. I remember when I first heard about the BRICS, I was like, nah. But they're coming out swinging, fam. They really are. This shit is the whole gold thing is a big red flag sign. And look, and they ain't buying this gold because it's flashy. They're buying it because for decades the United States dollar has been the world's currency. That gave America a huge advantage, but it also came with the power to cut countries off, to freeze their assets, to use the financial system as a weapon. And let's just go back to 2022 when all those sanctions got pushed on Russia for the Ukraine thing. I get it. It's fucked up with Russia and all that shit. I'm not saying what I'm saying is, but that's what's going on. And that kind of sparked it, in my opinion, for them to really start pushing towards this brick shit. Because think about it. Like, what would you do if you were putting fucking Xi Jinping and all that, right? They're trying not to be able to be controlled by the United States. It's a global shift of power, is what they're trying to do. This could end ugly. I mean, look, those sanctions, that was, yeah. I mean, because after seeing how sanctions could be used, these nations have decided they're done playing that shit. That's what's going on. They're like, fuck this shit. Like, we'll just make our own money. We'll figure it out. Now, I mean, easier said than done, right? For them, gold is the ultimate get out of jail free card. It's neutral money. It's an asset that sits outside of any single nation's political control. It's a global off ramp from the US dollar, a piece on the board that can't get frozen or bossed around by your rivals. This ain't just some trend, it's a tectonic shift. It's a squad move away from the US dollar, and it's happening faster than we've seen in our lifetimes. As gold has been surging, the dollar has had its worst 6 months, I believe, since the Korean War. Just like 70 years ago or some shit. Not good. So, what does this mean? What does this all mean? What does it mean for you? What does it mean for me? Look, you ain't got to be some crazy cat stacking gold bars in your basement. But if you care about your savings, the 401k you've been building for 20 years or whatever, you know, or what your money can even buy next year, then you better listen up. You dig? Gold going sky high isn't a story about gold. That's what I'm trying to get at. It's not a story about gold. It's the world telling you that faith in paper money and the dollar is going down the drain. This is a debasement hedge. It's a protection against your currency losing its purchasing power. When the government prints trillions and trillions of dollars and runs massive deficit, every dollar you hold gets just a little bit weaker. Well, gold holds its fucking ground. It is not controlled by any country. It think about it. That is a real safe haven, not fucking Bitcoin, crypto. If entire countries and the biggest money managers on the planet are running to the real safety of gold, why are you still out here chasing meme coins and overhyped tech stocks? Tesla, Nvidia. They're not just buying a little bit. They're fundamentally changing their reserve strategies for the fucking long haul, fam. Straight up. The price of gold ain't the story, though. Like I said, it's the fire alarm. It's a measurement of the panic and the instability in the system. With serious analysts and major banks now calling for gold to hit 5,000, 6,000, or even more. The message is loud and clear. Goldman Sachs is targeting 4,900. Bank of America is looking at numbers over 5,000. These aren't fringe voices. This is the heart of Wall Street telling you, the foundation that is not just sitting or rattling, it's starting to crumble. That's what you should be getting out of it. But look, this ain't financial advice, obviously. I'm not sitting here telling you what to do. I'm just trying to paint the fucking picture for you. This is just the real hitting you upside down the head with a gold brick, motherfuckers. This is a wake up call. The game is changing right in front of our eyes, and the people in charge aren't going to spell it out for you. You have to read the signs. And I go deep on all this stuff on what you should be looking at. Bonds, the yen, the dollar, gold, commodity prices. Don't just look at Tesla and Nvidia. Who gives a shit about that? And let's not get started on the whole circular payment structures going on between all these AI. I mean, it's like Enron shit coming, dude. Y'all better be ready, man. The big, beautiful bubble burst about to happen here sooner or later. Do me a favor, though. Hey, go ahead and like the video. If you learned more right here than you did from the talking heads on TV all month, they're paid to keep you calm and keep you in the system. We're here to tell you how it is. All right, at least I am. Subscribe for more straight talk on the big picture, minus the Wall Street lies and the political noise. We cut through the bullshit to show you what's really moving markets. And if you're serious about this shit, pull up to the Bag Brigade Discord. Link will be in the description of this video. It's on the YouTube channel page. It's on Twitter. But yeah, we're not charging right now. It's a free community. Now you do have to fill out an application, and we'll see what's up. But either way, yeah. But that's where we really break down the why behind all the money moves and what you can do to protect yourself. The conversation doesn't stop here, though. But the link is in the description. Stay sharp. Fam, stay sharp. Gold ain't just a shiny relic. It's a reflection of the chaos beneath the surface. If you're savvy, now that's the time to think about diversification and seeing how gold fits in your own strategy. Amid, all this uncertainty, the truth is, when the dust settles, those who prepared will be the ones standing tall, while everyone else scrambles. It's your boy Chuck BoomBerg, Chuck Taylor, Chuck Tiz. I hope you like this video. I'm going to throw some charts in here and stuff, and we'll go over those too. Signing out. Thanks for watching. See you on the next one. Oh, wait, yeah. Oh, yeah, that's right. I don't ask why anymore. I stopped a long time ago. I ask why not. And don't ever forget this. Like, I made something out of nothing, literally. Thanks for fucking nothing. Peace.
BoomBerg on the track.